Good morning, friends. Today is Wednesday, November 30th, and I'm Marv Eisen of Timeless Dollar Trading Academy. And starting out the day, looking at the economic calendar, which I do each day, and I suggest you do as well, there were a couple of pre-market announcements that I call your attention to that are going to have an effect on the market. And that was the ADP employment report. The estimate was for 190,000 new jobs added to the economy. The actual number came in far lower at 127,000 jobs added. Also, another report was the real GDP, and the estimate was for a 2.7% growth rate. This is an annualized growth rate, where the number actually came in stronger, 2.9%. These numbers actually conflict because with lowering employment and strengthening economy, that gives the Fed some metrics to consider when they set interest rates. Speaking of which, at 1:30 today, Fed Chair Jerome Powell is due to speak, and the market is going to be listening carefully to the words that he uses to get an indication of where the Fed is likely to move interest rates going forward. We will find out more at 1:30 today, and I suggest you might sit on the side while the Fed chairman speaks, because it can create some commotion in the market. Looking at the trading chart, this is the E-mini chart of yesterday with my trading zone. As those of you who've watched my previous videos know, I measure the market using calculations from Taylor's trading technique. And I measure the market, and the market indicated that it was going to move in a range of 42 points. And 42 points is what you see here between my resistance level at 4,003 and my support level at 3,961. And the market traded down here. Now, Taylor's technique has no bearing, doesn't really care on where the market opens or closes, except to measure where it's likely to trade based on the increases and decreases, in other words, the movement. So the range is particularly useful when using the Taylor numbers. Of course, the market does respect the actual resistance and support numbers, and I'll go into that in other videos, but the numbers that I calculated were that the market were likely to trade in this range, but also in a 42-point range. The market actually put in only a 40-point range, so not too far off. Let me show you what I mean. If I take my trading range here and I copy it, I'm going to paste a copy to the intraday high right over here. See this intraday high, this candle right over here? Okay, and here is where the market actually bottomed out, 40-point range. My calculation was for a 42-point range. Today, by the way, it's a little less, and I'm not going to show you that, but basically I'm going to get rid of this, and I want to show you something else. In addition to the measurements, I use the stochastic indicator as a way of determining where prices are likely to turn. Now, the stochastic is useful for that very reason, because what we want to know, and particularly for those of you who are scalpers or who are swing traders with longer time frames than scalping, which can last only seconds, as you know, the stochastic, in conjunction with price action, will give us an indication of where prices are going to turn. And I highly recommend that you use the stochastic and study it. Don't just use it. Study it. Go back to your charts, look over a number of days, and you will see that the stochastic is pretty accurate, or very accurate actually, in showing you where market is likely to turn in conjunction with price action. As you see, there's a doji over here. Pay attention to dojis. Always pay attention to the doji. And the subsequent candles, and these are 3-minute candles, my friends, the subsequent candles did not come up and test the price, the high price that this doji put in here at 39.81. So in conjunction with the overbought stochastic, that would indicate that the market was going to turn over here, which in fact, boom, it did. Anyway, that's my video for today. If you want to get some insight into how to be a better trader, you might want to look into my courses at timelessdollar.com. I offer a free course that talks about how to spot and avoid the tricks and the manipulations that professionals use to trip up unwary traders. And my regular course, of course, goes into a whole bunch of other stuff, but nevertheless, there are only 6 trades that you have to know as a trader. Only 6 trades. There's nothing complicated about trading. Unless you have a crystal ball, then you remove all the complications, because if you had a crystal ball telling you where the market is going to go, you don't need to know anything else. But nobody has a crystal ball. Nobody knows where the market is going to go. But we can, and I do, measure the market. So that's my video for today. Sorry about being a little long-winded. Again, you might want to stay out of the market at 1:30 when Fed Chairman Powell is going to be speaking, and we will see what happens today. So have a great day. Trade with lots of patience. Thanks for watching, and I'll see you in my next video.